What's up, everybody? My name is Tesmer. I'm a farmer's insurance agent here in Southern California, and today we're going to go over home insurance and all the different coverages that make up your home insurance and what each one does. So let's dig into it. So the first one and the most important one is coverage A. So this is your dwelling reconstruction cost. And so when you get a quote for your dwelling reconstruction cost, and this is from any insurance company, don't be shocked if your home on Zillow, it says it's worth $1 million, but then you get a reconstruction cost of $650K. You're like, what? Like, why is it so undervalued? So the reason being is no insurance covers land. Okay, land is irreplaceable. So this is literally just rebuilding the structure itself. So as an insurance agent, we have a special software that will automatically calculate the reconstruction cost of your home. And so there's different things that we can tweak about it. If you talk to me and say, hey, I have marble this, marble that, everything's, crown molding, blah, 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 we can up it. There's different categories we can put it in. And if it's a cheaper home, then we can, get the right pricing there too as well. But so basically that's reconstruction cost. So how much would it cost to rebuild your home? And so what the computer's gonna do is look at how the home was built, what kind of roof does it have, what kind of siding, what kind of flooring, every little nook and cranny about your home. It's going to ask questions about how much it costs to rebuild it, because that's what we're insuring, right? And so it's funny here in California, especially, you might be quoting someone's $3 million home in Malibu that's like a little beach shack, and the reconstruction cost is like $600K. So the land itself might be like $2.5 million or $2.4 million, okay? But that's not included in the reconstruction cost. So that's coverage A, reconstruction cost, and how much it costs to just rebuild your home. Then we have extended replacement costs. This is still coverage A, but basically this is like a 20% buffer. So like, let's say I was just remodeling my home and I was putting in all these really nice new features in my home. What extended replacement cost is going to be if coverage A is not enough and I can show proof and receipts that I was actually redoing my home, Farmers Insurance will give you an extra 20% buffer on coverage A that will make sure that everything that you are doing to your home gets covered correctly. So like the marble countertops you're putting in like a new rooftop deck, whatever, just so that we have an extra 20% buffer to fully rebuild your home. Then we have coverage B. So this is separate structures. This is exactly what it sounds like. So these are your pools, your fences, your sheds, everything like that. So this is going to be typically right around 10% of coverage A. So if my coverage A, my reconstruction cost is $500,000, for separate structures, I'll have 10%. So that's $50,000 to rebuild my pool, to rebuild my fences, to rebuild my sheds, anything that's not attached to the actual structure itself. Then we have coverage C, personal property. So if you were to take your home, flip it upside down and shake it, everything that would fall, this is your personal property. These are the things that you own. So if you were going to move tomorrow, what would you take with you? That's your personal property. That's also covered in home insurance. So typically these are things like your clothing, your furniture, your electronics, things like that. And we need to be clear on this too. There's limits for things for personal property. So like, for example, jewelry and firearms. Those are the two big ones really that I hear about and talk about. So let's say your wife's wedding ring or your own wedding ring. Let's say it's worth $10,000, right? And let's say the deductible for my home is $10,000, okay? If something happens to my home and I need to pay $10,000 to rebuild my home, that makes sense, right? Because it's going to be $500,000, right? So you pay $10,000 to get $500,000, so that makes sense. But if we only have like a $2,000 limit, and this is all insurance companies, if we only have about like a $2,000 limit on jewelry, what happens to my diamond ring if I lose it or it gets, my home burns down and it's gone? What we can do is add a floater. So it's called a personal property floater. What we do is we show the bill of sale or a appraisal of the item that we need to put a floater on. So like, let's say it's a diamond ring and let's say it's $10,000. I would put a floater on that and make the deductible probably about $500 or $1,000, right? Because that way, if I just lose my ring, I don't want to pay $10,000 to get it back. I'd pay $500 or $1,000. And typically we have jewelry and firearms are the two big ones where we would put floaters on. So that's personal property. Coverage D, we have loss of use. So again, this is exactly what it sounds like. So your home burns down and we need some place to stay. So loss of use is typically about 20% of coverage A, okay? So for me with my home, my home on Zillow, it says it's $550,000 in Southern California. That's not a whole lot, but anyway, so the dwelling is $415,000, so that's coverage A. My loss of use is $83,000. So if my home burned down, Farmers Insurance, they would give me $83,000 to rent a home, to if I want to stay in Airbnb or anywhere, as long as I prove that I have a roof over my head, Farmers Insurance will take care of that bill until my home is rebuilt, and then I can move in. And so that usually lasts for 1 year. So that's $83,000 for 1 year of having a different roof over my head. All right, next we have coverage E. So this is personal liability. So these usually come in increments of $100,000. So the lowest we can do is $100,000. Typically what everyone does, and the standard is usually about $300,000. Me as a business owner, I upped mine up to $1 million, and it's not that much more expensive, because if I'm getting sued or something like that, typically what lawyers will do is they will look exactly at what does this person own, how much can we sue them for. If somebody's homeless, you're not going to sue them for $10 million, because how are you going to get that, right? But somebody who might have a little bit more or have more to lose, they can get sued for a higher amount, if that makes sense. So typically personal liability, the example that insurance agents like to use is if you go to a hotel and let's say there's a nice vase right in the middle of the hotel lobby and you actually knock it over, right? The hotel's gonna sue you to replace that vase. This is exactly what would cover it. And this is from your home insurance, which is kind of interesting, right? You think of your home insurance just being, in your four walls. It extends out and beyond that when you're out and moving around, okay? So that is personal liability. Next we have building ordinance. So what this is building code. So if I have a home that was built in 1980, let's say it burned down, but I need to replace it today and I'm recording this video in 2022. Let's say it got rebuilt in 2022, but the building codes have changed. Like we need to have the stairwells like this. We need to have, especially in California, earthquake protection, and the home needs to be built like this. There would be an extra 10% buffer of coverage A, the reconstruction cost, to make sure that all the building codes are the way that it has to be, so that the state can approve it and say, okay, this is a functioning working house and everything is to code. That would be building ordinance to make sure the home is exactly the way it needs to be, to code for the state of California or wherever you may live in the United States. Then we have coverage F. So what coverage F is we like to call this go away money, or as it's actually listed here, is medical payment to others. And so these come in increments of $1,000. You can have $1,000, I think there's $2,500, and then $5,000, and then it goes up to about $10,000. I have mine at $5,000. So if you were to come over to my house and you slipped and fell, and let's say like it's not really that bad, but you needed to get an X-ray done, then you could say like, hey Joe, I slipped and fell in your home. I need to get this X-ray taken care of. So what Farmers Insurance will do, will pay up to $5,000 to pay for that person's medical bills and just go away. And there's no deductibles, no rate increases, none of that. So it's literally just like go away money. You fell, okay, you need this money, just go away, and we're done. And it's really good coverage, because you don't want to dig into your deductible and you don't want your rates to go up. So it's great. So if you ever need a home quote and you live in the state of California, I would love to help you out. My information is below, my phone number and my email address. Feel free to reach out to me anytime. Be more than happy to get back to you. Thank you so much for watching this video, and I hope to hear from you soon, and I will see you in the next one. And if you don't mind liking and subscribing, that would really help me out. It's a little baby channel, but it would help out nonetheless. So thank you so much, and you have a wonderful day. Take care.